Okay, so welcome to the Basics in Forex Fundamental. This is Charles Obinali, the CEO of AceFX Academy, and I'll be your tutor, your guide, and your host. In this class, we're going to be learning the value in Forex. Now, this might seem very, very simple, but some of us don't actually understand it. You have to understand that whatever you're trading has value. Whatever currency pair you're trading has value. And in the basics of Forex Fundamental, the first thing you have to understand is the value in Forex. Before you can ever understand fundamental, before you can know how to read fundamentals and macroeconomics, you have to understand the value in Forex. Now let's go straight into it. Forex trading is simply the act of buying and selling currencies in pairs, right? I need you to take note of everything I'll be telling you in this lesson. Before we go with it, I need you to take note. It might seem easy, it might seem like something you already know, but I want to let you know that there are a lot of important concepts in which would help you understand the aim of reading and understanding fundamental when it comes to Forex. And in this lesson, like I said, we'll just be going into the value of a currency in Forex. So Forex trading is simply the act of buying and selling currencies in pairs like Euro USD with the aim of making profit from the change in exchange rates. You understand? So in Forex trading, what we're simply doing is buying one currency and selling the other. Do you understand? For example, if I'm buying Euro USD, I'm just simply saying Euro, which is the base currency. Base currency is the currency which is in front. You should know this, right? You should know this. Base currency is the currency which is in front. Quoted currency is the currency which is at the back. So Euro USD, Euro is the base currency and USD is the quoted currency. So in Forex trading, if I'm buying Euro USD, what I'm simply saying is I am buying Euro and I am selling USD. Why? Because Euro has greater value than USD. We'll get to that, right? So when you are buying a currency pair, you are expecting the first currency, which is the base, to gain value against the second currency, which is the quoted currency. When you are selling a pair, you are expecting the base to lose value against the quoted. That is just simply what you're doing when it comes to Forex trading. You're just simply trading the difference between one currency and another. So whatever currency pair you're trading, just know that you're trading the difference between the two currencies that are paired together. So in trading, we focus on currencies that have more value. Do you understand? The currencies that have more value, that is what we are focusing on. So most traders don't know this, right? They just buy based on technicals. But if you understand the fundamental value of a currency, it will be easy to make profit from the Forex market. So I want you to understand that the psychology behind what you're doing in Forex trading is not just simply buying and selling. No, you are looking for the currency that has more value and you're buying that particular currency. And whenever you're selling, you're looking for the currency that, let's say the quoted currency has more value, you are selling that currency. You understand? So in Forex, you're just looking for the currency that has more value, and that is how you can understand fundamentals. We'll get into what fundamental is really all about, but before you can understand the concept of fundamental analysis, you have to understand the concept of value in Forex. So let's keep on going. So in the Forex market, the value of a currency referred to how much one currency is worth in relation to another. That is just simply what value of a currency is. The value is constantly changing due to the variety of economic, political, and social factors. Now, factors can influence the value of a particular currency. You understand? And understanding these changes is the key part of fundamental analysis. So, for example, let's say you're trading Euro USD and Euro USD is selling. What does it mean? USD as a currency is doing well. And if USD as a currency is doing well, it means some factors, economic factors, political factors are affecting the currency USD. Do you understand? So for Euro USD to be selling, it means USD is strong. And if USD as a currency is strong, the economy is doing well and USD has value. That is where the concept of value in Forex is all about. You understand? That is where value comes in. So you have to understand that whenever you're looking at a currency pair, you're looking for the currency in that currency pair that has greater value. So fundamental is not really hard. So I just summarized what we do in fundamental analysis, looking for the currency that has more value, and whatever currency has more value, that is the position. That is the position we'll be focusing on. Do you understand? So currencies are always traded in pairs. Don't forget, like USD JPY and Euro USD, meaning one currency is quoted against the other. So when we say euro, which is euro, is gaining value, we mean it's becoming stronger compared to the other currency which it is paired with. I don't know if I'm making sense. I don't know if you're understanding this, right? But you should understand it. Remember, in case if you have any question, there's my WhatsApp contact. You can ask me all your questions. You understand? And I'll be simply willing to guide you. This is just the beginning of fundamental analysis. You're learning the basics of fundamental analysis, and to understand fundamental analysis, you have to understand the value of a currency. Do you get my point? So let's keep on going with that. So several factors influence the currency value. Now that we understand that a currency or a currency pair is rising based on the currency that has value, and is selling based on the currency that has value. Understand? If the base currency has value, the currency pair will be buying. If the quoted currency, which is the one at the back, has more value, the currency will be selling. So now, what are the factors that influence the currency value? A lot of things influence the value, and these are the things we read to understand in fundamental analysis. Once we can understand what these things are, we can really understand, okay, what we are going to be focusing on in fundamental, what we are going to be trading. You understand? But this is not just the only thing you do in fundamental analysis. Remember, this is just the basics of fundamental analysis. There is more to it, but for now we're just looking at the value of a currency. So interest rates. So higher interest rates often attract foreign investors looking for a better return. You understand? So which increases demand of a currency and pushes its value up. So if the interest rate of a particular currency, let's say the interest rate of CAD JPY, the interest rate of JPY increases, CAD JPY will sell because investors are willing to buy that currency more. The currency will gain more value, and JPY, which is the quoted currency, will be leading. And if the quoted currency is leading, the currency pair would sell. If the base currency is leading, the currency pair would buy. That is just simply it. We would get to understand what interest rate is really all about. But I just want to let you know that if interest rate is increasing, it attracts more investors. And if investors are buying one particular currency, it will be increasing in value. Inflation. So lower inflation tends to support a stronger currency. You understand? Inflation just simply means the rise of goods and the increase of goods and services in a particular economy. So if the prices are dropping, it means people can buy things at a lower price, and this is good for the currency. It's good for the economy. Anything that is good for the economy is good for the currency. Do you understand? Because it maintains the purchasing power. You understand? So why high inflation can weaken a currency? So if inflation is increasing, it can weaken the currency and makes the value to drop. So the example I use, CAD JPY. Let's say the JPY currency, the inflation is increasing, JPY will get weak and people wouldn't want to buy it. Why? Because it's getting expensive. The currency, the things in the economy are getting expensive, so people will not want to use the currency anymore, and this in return will make the quoted currency weak. If the quoted currency is weak, what do you think CAD JPY will do? CAD JPY will be what? Buying. Do you understand? So that's just simply it. So economic growth. So strong GDP growth, rising employment, stable production levels all contribute to a stronger currency as they signal a healthy economy. Remember, if the economy is doing well, the currency is doing well. If the currency is doing well, it will be bullish if it's the base currency, and if it's the quoted currency, it will be bearish. That's just simply it. You understand? So political stability. So countries with stable governments tend to have more trusted currencies. On the other hand, political uncertainty or conflict can reduce the confidence and cause a currency to lose its value. So whenever the economy is doing well, like I said, the government are doing well, the currency will be doing well, the currency will be strong. If there's political uncertainty, there's war, there's trade war, there's all these things, it will affect the currency as a whole and it will reduce in value. And if USD reduce in value, what do you think you do for Euro USD? You would what? Buy Euro USD, because Euro will be stronger than USD. Do you understand? And Euro is the base currency. So we're just looking at value of a currency in Forex. And that is how you can read fundamentals, by understanding that whenever you're looking at a currency pair, you're looking for the one that has more value between those two currencies. And whatever currency has more value, that is the direction we are going to be focusing on. That is as simple as that. Fundamental is very simple. It's even more easier than technical. Ever since I started using fundamental analysis, I can tell you that my win rate increased drastically, and I don't have to, be confused looking for the places in which a pair will head to. I already know the particular direction in which a currency will head to, because I already know which currency is going to lead the other. Do you understand? So trade balance. A country that exports more than it imports will usually see increase in demand for its currency, which supports the value. If our country is exporting more, it means we are making more money than we are importing, right? Then it means we are making more money, and it means our currency will increase in value. And it means that, okay, the currency, if it increases in value, if it's in the forex market, you're going to be buying that particular currency. Do you understand? So that's just simply it. All these things I'm mentioning are things that affect the value of a currency. So speculation and market sentiment. So traders' expectation about the future based on news, rumor, or economic forecasts can also influence the value of a currency even before the actual data is released. So whatever investors are thinking, whatever the market sentiment is, we'll get to understand what market sentiment is as we move further with the training. But for now, I want us to just focus on what we are learning, which is the value. All these things affect the value of a currency. Do you understand? So if people are predicting that this currency will do well, on the other hand, the currency will actually do well because investors want to buy the currency on time. And if investors are buying this currency on time, it will obviously do well in the forex market. So euro USD, if euro, they are buying euro on time, euro USD will buy. Why? Because euro is the base currency and euro is doing well. Do you understand? I'm using euro USD as an example because that's the pair that most forex traders know. You can use other currency pairs as your example. I want you to understand that you're just looking for the currency in that currency pair that has more value, and that is what you're focusing on. So let's go. Why does this matter? So as a forex trader, you have to, your main goal is to predict whether a currency will increase or decrease in value based on these factors. When you understand what drives the currency strength or weaken or weakness, you understand, you can make better decision when buying or selling a particular currency pair. Do you understand? Sorry about the noise. You might be hearing some noises around. Sorry about it. I'm actually in a crowded place. So if you're buying a particular currency pair or you're selling a particular currency pair, it depends on the strength or weakness of that currency involved in the currency pair. Do you understand? For example, if you expect US economy to grow and interest rates to rise, you may look to buy USD against a weaker currency. And if inflation is high and a country's central bank is cutting rates, you get to understand what cutting rate is as we move on with the training. That currency might weaken and create an opportunity to sell. So all these things are just simply what we are doing in fundamental, understanding the currency that has more value. And once we know the currency that have more value, we know what position we are going to take in the market. And fundamental is different from technical because you can trade whenever you know the currency that has more value. You can trade that particular currency for months, for weeks, because you know that that currency will keep on having value until maybe another economic event, another news pop up to make that currency to weaken in its value. It's as simple as that. You understand? Fundamental will just tell you the direction of the market. That is where you now add your technicals for entry. To me, I see technical analysis just as entry now. Fundamental is the main analysis. You already know where the market is heading to. Technical is just for you to find entry and you're good to go. Do you understand? So the key takeaway in forex, you are not just trading money, you are trading the value of and the strength of one economy versus another. Learning how to analyze what gives a currency its value is the foundation of successful fundamental trading. I keep saying this, fundamental analysis have changed my life. Like, if you're watching this, if you're listening to this, know that it's SFX Academy, and I can tell you that fundamental analysis have changed my life. Ever since I learned it, I have been making constant profit. Why? Because I can just look at a particular currency, I look at the data involved, and I know if this currency is weak or if it's strong, if the value is good or if it's bad. And if the value is strong, I know I can pair it with other currencies and I know the positions to take. For example, now if USD is strong, you know that GBP USD will sell, you know that USD CHF will buy. You already know the direction of all these pairs. You don't need to even do too much analysis. I can tell you the direction of the pair without even looking at the technical analysis. That is how good fundamental can be. So you are not just trading blindlessly. In fundamentals, your eyes is more open to what is happening. When you see a particular pair going up, you automatically know why it's going up. You don't just say it has reached a POI and it's going up. No, you know why it's going up. You understand the economic, value of why it's going up. Do you get? So that is just simply what fundamental is, and that is the ending of this lesson. I hope you understood it. The next one we'll be going into is the fundamental analysis and macroeconomics. I'll be explaining what this is, and I'll be helping you to understand what it's really all about. Stay tuned and have a lovely day ahead.